With all of the record deliveries on Comex, massive, and the shrinking inventories on the LBMA, you think this is part of a deliberate move to reshore and reprice gold, or even partially back Treasuries and restore global trust, as Judy Shelton has told me twice now, once to me and once to Michelle McCory on this show, that on July 4th, 2026, she says and has publicly been saying all along that she believes Trump will tie the back end of the Treasury market to gold. What that would say to me is, yeah, you can bring back manufacturing with no upfront borrowing costs, where the redeemability is in gold in 20, 30, 50 years. She said they'll even make a 50-year with the Stablecoin Act running the front end of the market. Do you think gold is being reintegrated into the system here in the States? Possibly. And maybe even across the globe as a settlement system with the BRICS nations.
The world is quietly preparing for a new financial order, one that could merge the old foundations of sound money with the new era of digital assets. The record gold deliveries on Comex, shrinking LBMA inventories, and rapid central bank accumulation are not random market trends. They're signs of a system repositioning itself for a gold-linked framework. The idea of partially backing U.S. Treasuries with gold, as has been discussed within policy circles, is no longer dismissed as a fringe theory. It's emerging as a credible path to restore confidence, stabilize debt markets, and reassert the United States as a trustworthy issuer in a world rapidly shifting away from fiat trust. Andy Schectman and Alan Hibbard, two leading voices in the precious metals and macro strategy sectors, note that this transition may extend beyond the U.S. to a global gold settlement model aligned with BRICS initiatives. Even digital instruments, such as stablecoins, and institutional crypto players, like Tether, are stacking gold, hinting at a hybrid system where physical assets and digital infrastructure converge. The financial world is moving toward one unavoidable conclusion: the return of gold as the ultimate standard of credibility and settlement. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We're seeing, and have been, the central banks front-run this gold run for the last 5 or 6 years. And kind of leads me to my next question. We're seeing record physical deliveries on Comex and shrinking LBMA inventories. To me, that looks more like sovereign accumulation than retail. As someone who's in the retail space, I would tell you I'm almost positive it is. And it seems like these traders certainly know the information. You now have Morgan Stanley moving away from a 60-40 stock bond allocation, as Wall Street has talked about forever, to a 60-20-20. Citing, again, they expect sell half your bonds and buy gold. You have Michael Hartnett from Bank of America saying 25, 25, 25, 25. Stock, bond, short-term treasuries, gold. You got Jeffrey Gundlach saying 25% gold is not overweight. There's more and more clues out there from big money that seems to be now rethinking gold, but the money that has been front-running this, the most well-informed traders in the world, seem to have known this was coming. And I guess my question to you is, with all of the record deliveries on Comex, massive, and the shrinking inventories on the LBMA, you think this is part of a deliberate move to reshore and reprice gold, or even partially back Treasuries and restore global trust, as Judy Shelton has told me twice now, once to me and once to Michelle McCory on this show, that on July 4th, 2026, she says and has publicly been saying all along that she believes Trump will tie the back end of the Treasury market to gold. What that would say to me is, yeah, you can bring back manufacturing with no upfront borrowing costs, where the redeemability is in gold in 20, 30, 50 years. She said they'll even make a 50-year with the Stablecoin Act running the front end of the market. Do you think gold is being reintegrated into the system here in the States? Possibly. And maybe even across the globe as a settlement system with the BRICS nations. Big question, but really what I'm saying is gold now transitioning into the monetary system by the massive inflows we see coming into the United States, or is it just simply arbitrage and tariff threat?
I think it's more of the former. I definitely think that we're headed towards a new monetary system. You had Secretary Scott Bessent say that, he used to have a fund. People would call him a gold bug. He loves gold, and he thinks that a new Bretton Woods is going to happen in the next 4 years, right? He said this right before Trump was elected, and he wants to be a part of that. So that's a new monetary system. He wants to be a part of it, and he likes gold. You also have Trump saying that, there's something nice about having the dollar backed by gold. I kind of like that idea. So, okay, fine. There's a lot of clues that suggest this. And to your point, Judy Shelton, I don't think she would be saying so confidently that Trump is going to issue gold-backed bonds if she didn't know more about that and if it wasn't being discussed, very, very seriously. So there's always a reason it may not happen, or maybe the timing is off. But I think we can take that as at least a very strong intention by the administration to move in this direction. And to me, that's sort of the key indicator rather than the specific metric it takes or the specific date of launch. So yeah, if we see that, and then if we look globally at central banks, we've seen a sort of right sizing of the gold to GDP ratio of a lot of European nations. And this is over several years. So some nations are actually selling a little bit of gold if they have too much relative to a certain debt to GDP ratio. Others are accumulating. And so they're sort of lining up. It's kind of amazing. I learned about this through a Zero Hedge article a couple years ago, and it's continuing in that path. Of course, China is vacuuming up gold all over the world. It's not only the number one producer of gold, but also the number one importer of gold in the world. That's very unusual for a commodity. So, central banks are absolutely grabbing gold. They're right-sizing it. They're preparing for some type of new monetary system, and it's probably going to be backed by gold. It's not going to be silver. It's not going to be Bitcoin. It's going to be gold. And so whether we get that in 2026, I don't know. But what that signals to me is I got to get my gold ahead of time and then just wait for them to sort of, hash out the details. So pretty simple trade.
Yeah, I agree. I think, until the central bank stop buying, the bull run in gold is certainly alive. I agree with you completely and totally. You mentioned Bitcoin. One of the reasons that I'm so thrilled that Michelle McCory is here now is because one of the things that I have found particularly distasteful, regardless of my opinions on Bitcoin, is the constant divisiveness between the two camps, the mutual exclusivity. I admire that about you and Mike, in that I know Mike is someone who believes deeply in precious metals, but has an opened enough mind to look at the other side. I don't think you ever grow unless you listen to other people's viewpoints. I am not saying that I am someone who advocates for Bitcoin, but what I am saying is that the communities should be, I think, united rather than divided, as the message that we focus on is largely the same. In fact, I was looking at your X page, and there was one comment where you had commented on, the guy said, Bitcoiners know Bitcoin better than gold, and they know the reasons to own gold better than the gold bugs do. Now, I don't know that I agree with that or not, but what I'm saying is that largely we see the world through the same lens. Choosing the vehicle, one that maybe focuses more on profit and the other on preservation, well, to me, that sounds like a marriage made in heaven. I guess all I'm trying to say is that I think that it's a mistake to ignore Bitcoin every bit as much as I think it's a mistake to ignore gold and to poo-poo it. And I think learning from people like yourself about Bitcoin's role is important. One of the reasons I wanted to have you here and ask you, and I guess here is the big question. It's unequivocally known that Tether is stacking Bitcoin alongside gold. With it, it appears as though, with the $8 billion in gold they have already and their attendance at the Beaver Creek Mining Summit, they're going right to the miners, and they're also buying Bitcoin. They own a lot of it. So to me, that feels like a signal. It's not just a hedge. And if sovereigns begin accumulating Bitcoin, we haven't seen a lot of that yet, but again, you got Senator Lummis from Wyoming who is advocating for this. In fact, revaluing gold next year, part of the executive order, talks about revaluing gold, selling some of it off.
The ongoing transformation of global finance is revealing deep fractures in the old system, where fiat currencies are losing trust and tangible assets are regaining authority. Recorded central bank gold buying, the expansion of BRICS gold settlements, and the rise of Bitcoin-backed instruments all point to a deliberate global diversification away from U.S. debt dependency. The monetary order built on credit and leverage is gradually giving way to one backed by energy, productivity, and tangible value. What's unfolding is not chaos, but recalibration, the market's attempt to restore equilibrium after decades of excess creation. This shift is also technological. Stablecoins and blockchain infrastructure are now merging with gold and sovereign reserves, creating a bridge between the digital and physical worlds. The end goal appears clear: a hybrid system that preserves the advantages of digital efficiency while restoring the discipline of real money. Fiat's credibility crisis is accelerating this evolution, not delaying it. As debt surges and deficits compound, the assets that can't be printed, gold, silver, Bitcoin, are quietly taking center stage in the next era of monetary order. Let's get back to the interview.
Regardless how people feel about Bitcoin, my question to you is could it become a tool to recapitalize balance sheets or maybe even help offset the United States debt if companies like Tether are accumulating it through the synthetic demand accumulated through the movement of money on the Genius Act? Look at Bo Hines connected to this system. Could this all be part of recapitalizing or even paying off the $38 trillion in debt and the $175 trillion in unfunded liabilities? I guess is what I'm kind of getting at.
Yeah. Okay. So a lot to unpack there. Let me actually address the gold versus Bitcoin thing first, and then let me turn to like how you use the assets to recapitalize the balance sheet. So I totally agree with you. I think that the gold and Bitcoin communities would be so much stronger if they partnered up. It would be for Bitcoiners to welcome the gold bugs and vice versa.
Right.
So I think if I could speak as a Bitcoiner for just a moment, I've held both assets continuously for 10 years. So if I could speak as a Bitcoiner for just a moment, I would say we forget how weird we are. We're so weird. We adopt new technologies. We question everything. Like we'll ask questions like, what is money, and contemplate it for 10 hours. We do really weird things, and we can't expect the other 99% of the population to get behind this weird technology wrapped in weird layers. It's just not politically viable. It's not palatable to the general public yet. It'll take a couple generations until people are comfortable with this technology and the fact that it could be a money or it could be a store of value. It's just a bridge too far right now. So Bitcoiners would be way better off if they supported a gold standard, an official gold standard in the world, and we actually use sound money. And then they can continue to own Bitcoin on their own. If they think it's a superior form of money, it's thermodynamically better than gold. Whatever the argument is, you can continue to own Bitcoin, as I would under those circumstances. Conversely, I think a lot of gold bugs dismiss Bitcoin either because you can't touch it or you can't use it during a power outage, or pick your objection because of how weird it is. And I think a lot of gold bugs refuse to consider the possibility that money could be digital or could be abstract. So I think if we work together, we could get a lot more done. We could end the fiat system, which is the most important thing, and end the systemic theft, end the endless wars, and so forth. So that's kind of the main thing. I wish we could all come together. That's that. And so getting back to your question about how do you use these assets to recapitalize a balance sheet? Could Tether be doing it? Ultimately, the way to keep it simple is to just realize that everything boils down to energy. Everything is energy. Food is energy. Music is energy. Clothing is energy. Our video is energy. Money is energy. It's economic energy, and so forth. So if your energy is leaking out of your life because it's currency, I work hard to acquire this, and then my energy disappears because someone else can print these out of thin air. If that's the problem, then the solution is to use a form of money that doesn't leak energy. So whether it's gold, silver, Bitcoin, or something else that gets invented, that's fine. And the solution is so easy. You just acquire the thing that's not going to leak energy, and that's it. Everything else is details. So do you leverage this? Do you, whatever? Do you buy Treasuries, which are future dollars? Do you, promise to pay an ounce of gold later, and all these sophisticated things? That's all a way of complicating the issue. You just have to hold something that doesn't leak energy. And then at some point in the future, when you want to do something, your balance sheet will be healthy because you have that energy. You have the energy you earned years ago, and you still have it. And this is true if you're an individual, a company, a country like the United States. And so when we think about having 38 trillion in debt, it's because we've leaked our energy all over the place. We've spent money we didn't have. We've leaked energy we didn't earn. And now we owe it. We have this giant energy deficit. And so how do we get out of that? Well, we have to actually earn our way out of it one way or another. And when we earn our way out of it through actual growth, we should be storing it in something that doesn't leak energy, gold, silver, Bitcoin. And when we do that, all of a sudden our balance sheet will be healthy. So that's kind of how I would summarize it. Just use honest money and earn it. That's it.
Right on. I like that. And I guess when you put all of this together, the dollar crumbling fiat system, gold, Bitcoin, new trade systems, I mean, to me, it points to a much bigger shift. So stepping back, it seems like we're heading towards a weaker dollar policy to reshore manufacturing, stablecoin regulation to create synthetic demand for the U.S. Treasury. You could argue bring us into the digital surveillance state. That's a topic for another discussion. You got Tether's moves and Bo Hines, who was just on the administration, kind of like Stephen Mirren being an advisor to Trump and now the architect of the Mar-a-Lago Accord, which advocates for a weaker dollar for manufacturing purposes. Now at the Federal Reserve, these lines are being blurred. You got BRICS building new trade rails, and gold and Bitcoin moving into strong hands. And when you look at the moves by the BRICS, largely through the expansion of the Shanghai Gold Exchange into multi-jurisdictional vaults, trading with one another outside the dollar, settling imbalances in gold. Are we watching a coordinated reset, or are we watching, to your point, you mentioned that, a reset or some sort of a new system, or are we watching a collision where the market, maybe like you mentioned, where we could get rid of the fiat system, where the market itself decides what money comes next? What do you think?
From an individual's perspective, somebody like me, I don't hold public office. I can't really influence policy. So the only thing I can do is choose the best money for myself. And of course, I do not choose dollars. I choose a combination of gold, silver, Bitcoin. I own all three. That's fine. That's pretty much where it ends for me. And whatever the official monetary policy is matters less in terms of my financial portfolio. However, if you're a sovereign nation and you're trying to tax your population and not crumble and not have a revolution on your hands and not have your military become overrun by a foreign military, you have a completely different set of incentives and a completely different set of resources that you're trying to manage. So basically, each one of these countries doesn't want to lose its power. It doesn't want to lose its ability to control resources. And unfortunately, they all have a fiat currency. So they want to weaken their currency enough to boost exports and keep manufacturing within their borders. However, if they weaken it too quickly, they lose all their power. Their citizens revolt, and they cease to be a government at all. So that's sort of the balancing act, and it only happens because they're using fiat currency. If they use sound money, this would not be a dilemma for them at all. They wouldn't have to worry about how strong or weak an ounce of gold is because they wouldn't even be able to control it themselves. The free market would do it, and it would always be finding that balance without central policy. So are we seeing a collision or a reset? Both. We're seeing both. We're seeing a collision of these competing fiat currencies that probably shouldn't be there, and we're seeing a reset back to probably official sound money, which will kind of permanently solve this problem. So I do think we're going to get a reset globally. There's all kinds of questions about how long could such a thing last before someone cheats the system. It's a topic, maybe it's a topic for another day. But we are getting a reset. And at the same time, we're seeing a lot of collisions along the way. And that's the obstacle to getting the reset. So it's really both.
The world is quietly rearranging its balance sheet, not through legislation or reform, but through the natural return to sound money. As debt spirals and fiat loses trust, the actual stores of value are being redefined in real time. Gold, silver, and even Bitcoin are emerging as the foundation of a parallel system built on scarcity, not promises. Every cycle of monetary excess ends the same way, in a flight to assets that cannot be devalued. This shift isn't speculative, it's structural. What's forming beneath the surface is the architecture of a new financial era, one where energy, productivity, and tangible wealth will again determine strength, not paper credit. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.